All right, good evening, ladies and gentlemen. Thank you very much for joining today. ThinkMarkets is going to be taking you through the basics of FX trading. Myself, Ridwaan Moolla, I'll be your host for today. Just quickly about tonight's session. We're going to talk very quickly about the basics of investing and how it actually works. From there, we're going to go into actually trading some FX. We're going to be doing actually a live trade, so you can actually see how the system works and how trading works. Then we're going to be showing you some little tricks about hedging using actually your share account. And last but not least, why you should be with ThinkMarkets and no other broker out there. Okay. So before we just get started with that, let's just talk very quickly about the difference between trading and investing. Now, if you're going to be trading, the thing to understand, and especially when we're talking about FX trading, this is for the short term. You literally cannot be doing trading, especially in FX, over the long term. And you're going to soon see why. Because one of the things that do hurt long-term trading is what we call the overnight funding rate or swap rate. So you've got to be very aware of that, and you've got to understand that always when it comes to trading, it is for the short term. Now, if you want to go into trading with ThinkMarkets, you need to open what we call a CFD account. So when you apply for an account, have what we call trading for the short term. With ThinkMarkets, you can obviously have both a trading and investing account. The trading account is your CFD account, and in there you can trade all the CFDs, FX, and all the different type of derivative instruments. Your share account is there for investing, and that's investing in all JSE listed shares, ETFs, ETNs, and all of the like. Okay. So with that, tonight we're going to be focusing on the CFD share account because we're going to be spending time talking about FX. And we're going to focus today on the basics of it. So I wanted to start going through the basics because many people know about FX, and obviously many of us have been sold a dream about FX trading, but we don't actually understand the basics of FX trading and how does it actually work. And that is the reason why we wanted to spend quite a bit of time so that we can get everybody's knowledge at the level it should be before you even think of trading in FX. The first thing that you need to understand before we even go any further is FX trading is the highest risk of trading that there is. You are trading in instruments that can be leveraged up to 500 times. Some of them are lowered, and I'll explain it a bit later, but you need to understand that there is going to be a very high risk with this. You can make money quickly, but you can also lose money very quickly. So before you start trading, what do you need to understand? You need to have a solid understanding of the financial markets. And this is for any trading, whether it be Forex, indices, commodities, or anything. You've got to understand market terminology, what are the unique traits of the market, and factors that will be influencing price movements. For example, in Forex, price movements, they measure in pips, and we're going to talk about all of these things. So don't be scared yet. And don't jump off. We're going to go through all of it. But in many other markets, we refer to things as ticks or points. Now, before you dive into it, you've got to actually understand what this means. You've got to know what pips are. You've got to know what ticks or points are. And each market, you've got to have an understanding of the terminology. If you don't understand the terminology, you are not going to be successful. You're not going to understand what people are talking about. The other thing that you also got to understand is what we call market conditions. And market conditions is basically identifying strong trading signals that present traders with the opportunity to either go long or short. And this is exceptionally important. Now, many of us, we get sold wonderful technical analysis because we think that if we can read a candle and draw some nice little fancy trend lines, oh, then we know exactly which way the market's going to go. We've seen it time and time again, and including most recently when the non-farmers payroll came out, that your technical analysis is only useful when complemented with your fundamentals. You have to be able to understand both of these. You've got to keep track of when news is coming out. You've got to understand what news is coming out. You've got to know what are the important things coming. And I'm going to actually show you how you can keep track of all of these things. Technical analysis, it is an exceptionally powerful tool if you understand technicals. And you're going to have to spend time knowing what we mean about when we say Japanese candlesticks, when we talk about a MACD, RSIs, and so forth. And we're going to go through all of where you're going to, and I'm actually going to be showing you where you're going to get all this information so that you can be an expert in technical analysis, but most importantly, understand that I've got to complement it with my fundamental analysis. The most successful traders in the world use both. Never, ever use one. And when anybody sells you trading signals, and they're just showing you technical analysis, be very, very, very wary of that, because your fundamentals can just throw everything out. And a very good example, like I said, we've just seen recently, look at the banks. If you were trading CFD shares in any bank right now, all the technical analysis prior to the whole SVB debacle was showing pretty good. You know, go long. The results were showing very, very, I mean, all our South African banks were showing some really good results. Nedbank, Standard, all of them, they look very, very positive. Yet we've seen this entire sector take a massive, massive knock. I mean, today it's been down, I think, over 3%. And that was purely on market sentiment because of what happened with the SVB. You have a ripple effect. Today, we also had Credit Suisse in the UK, that plummeted over 20%. And that plummeted not because of technicals, it plummeted purely because of the fact that one of the investors, who is from Saudi Arabia, said, we're not pumping more money into this. So that is the reason why it's so important to understand that you have to keep track of fundamental analysis. You've got to know what's happening in the markets and then use your technicals to complement that, so you know where your entry point will be and your exit point should be. Okay. Then the other big thing is whether we go short or long. Now, going short literally means that you are going to make money if the price drops. So for example, if you're trading FX, and we'll use USD ZAR, let's say you're trading, you're going, the exchange rate, sorry, is 18 Rand 50, and you believe that that's going to go from 18 Rand 50 to 18 Rand, then you would go short. If you believe it's going to go from 18 Rand 50 to 19 Rand, you would go long. But that's the one nice thing about when it comes to derivatives. You can make money either way. When it comes to FX or currency pairs, how does this all actually work? FX is very different to things like CFD shares. CFD share, if you're taking out a CFD share in, let's say, Standard Bank, well, you're looking at the price movement of Standard or ABSA. You're just looking at whether or not that share is going to go up in price or down in price. FX, and the reason why many people use the word currency pairs, is because you are quoting a currency pair and the movement of this currency pair. Now, when you want to make a profit, you need to look at the fluctuations in both currency, in the two currencies' exchange rates. The first currency we refer to as the base currency. And this is where we speculate whether or not it will improve or decline against the quote currency. So in the example over here that you have on your screen, we've got the pound and dollar. So GBP/USD, you'll see that normally anywhere if you're looking at it, at any FX pair. When you open your trade, you are looking very carefully now at the base currency. And you're either going to go buy, or in other words, long, or you're going to sell, go short, depending on what direction you think the value of the currency will go. So in other words, when we talk of a pound USD is equal to 1.2011, whatever the case may be, what we are basically saying there is you need $1.20 to buy £1. If it was a USD ZAR, We're basically saying there you need 18 Rand to buy $1. And that's how it works. The base currency is the important one. Is it getting stronger or is it getting weaker to the quote currency? And that is the most important thing you need to understand about FX trading. Base currency and quote currency. Once you understand that, now you know what it is you are actually trading in. You're not trading in a dollar here, you're actually trading in the base currency, the pound, and how it performs to the quote currency. Okay. The next thing you need to understand is what do we talk when we talk about FX pairs, and as you can see, there's a whole list here. They are categorized into something called majors, minors, and exotics. Now, the currency market, everybody will tell you, it's $1 trillion industry. It's trading trillions and trillions of dollars every day. But what do they mean? Well, your majors are what we call the most liquid or most actively traded currencies. And this actually accounts for 85% of the total volume in the currency market. Now, because they are so actively traded, what you will find is that there is a very, very tight spread. And what do we mean by spread? I'm just going to jump to the next screen. The spread is the price between the bid and the offer. So as you can see, Euro USD, that is one of the most traded currency pairs around. It is a major. And you can see that there is literally, with us, if you have a Think0 account, there is actually a zero spread there. These are raw spreads, as we call them. GBP USD, that has got a slightly 0.30 of a spread. But that's because at that point in time, it's very volatile. Volatility meaning that it is not at a very stable price and can jump up and down very, very quickly. So your majors, as you can see from this, will have what we call very tight spreads because there are people buying and selling every single millisecond, literally. The minors, well, now those aren't that often traded. And if you look at the screen right now, you can see that your minor pairs are things like Euro GBP, Euro Australian dollar, the Japanese pound to the, the British pound to the Japanese yen. These are minors. And what we mean by minors is that, yes, they are traded, but they are not trading literally every millisecond. They're trading a bit slower. And there you'll find, therefore, the spread will become a bit wider. And remember, again, the spread is the price of the bid and the price of the offer. And what that means is the offer is the price I'm going to be buying at. And when I want to close out the trade, I'm going to sell it. I'm going to get the asking price. Okay. Then come the favorite ones, the exotics. Now, the reason why this is one of the favorite ones is because exotics pretty much speak a lot to what we call our developing markets. So everything to the ZAR, pound to the ZAR, the USD to the ZAR, Euro to the ZAR, all of those type of currencies are what we call the exotics. Now, the reason for them being called exotics is because, and why they're also one of the more favorite ones when you want to trade it, these will move. I mean, if you were to look at the ZAR today, and I'll show it to you later on, the USD ZAR, you'll see it's been moving all over the place. I mean, you're looking at 1% movement just in a day. So they have great potential to fluctuate in price. And that is the reason why there's sometimes a lot of opportunity to actually trade these exotic pairs. The only thing to understand, though, is because they are not that heavily traded and they are randomly traded, it does mean that the spread will be a bit wider. Before I continue, just by the way, if you have any questions, there's a Q&A tab. Please do me a favor. You're more than welcome to type in any questions in there. We will, though, have a Q&A session at the end. But if you have anything in the interim, please ask your questions. I will have a look at it. I've got it open in front of me. And I will most certainly see if I can answer any of those questions for you while we're talking. Okay. So as I said, the most important thing to understand about currencies, majors, minors, exotics, what we need to understand is that there's a spread involved. And that spread ultimately determines your profit and loss. If I buy something at 105,320 and I sell it at 105,320, well, I've made zero profit or loss. And that is why we say the spread is very, very important. The tighter the spread, the better it is. But at the same time, if I want to trade exotics, I've got to understand that that is classified as a minor. And it's classified as an exotic, a ZAR, USD ZAR, as an exotic. The spread's going to be wider because it is not traded that often. With ThinkMarkets, and if you are going into currency trading and you really want to do FX trading, my advice to you is look at a ThinkZero account. The only difference here is that instead of there being the spread built in as, you getting the raw data, there is no spread. You get charged the commission. The commission is $3.50 on the open side and $3.50 again on the close side, or Rand equivalent of that. Okay. So now the big thing is, what is a pip? Because when it comes to FX trading, if you don't know what a pip is, then you have no idea what your P&L is going to be. So a pip is actually, and I've always said, I always find this very, very funny when it comes to FX trading, because the actual definition is a pip is the smallest whole increment in any Forex pair. But we end up always quoting things with 3 or 5 decimal places. So in other words, as you can see in the example here, you've got 1.36298. The 8 is actually, even though that has got 5 decimal places, that 8 is a small 8. So it's not actually regarded as a whole increment. So the 9 is actually where your P&L is really and truly going to be derived from. As per the example here, it is really and truly this simple. If you have, or if you've basically traded in the Euro USD, as this is the example we're using, and you have a movement from 1.3629, ignore the 8, and it goes to 13630, that means that there's been 1 pip move that you've actually, and because you were long, obviously that means you've made a profit. If you were short, you would have made a loss because it went up. However, with the Euro USD, remember this has 5 decimal points. Things like the USD, Japanese yen, they only have 3 decimal points, which means that you have to look at the second decimal point. That is the pip. How much is a pip worth? Well, this is dependent on the currency of your account, the pair you're trading in, and the position size of your trade. And that leads us to what we refer to as margin or leverage. Now, margin is the amount required to open a new Forex position. It is not a fee. It is actually a deposit that you are putting down so that you can get exposure to something. To give it to you very simple, I'm going to use a CFD share as an example. If I were to buy, or if I wanted to go long one contract of, let's say, MTN, and MTN was 100 Rand, the margin requirement is 10%, it would mean I would have to put 10 Rand down as a deposit to get exposure to 100 Rand. That would mean my margin is 10%, and that would also then mean that my leverage is 10 times. So I'm putting 10 Rand down. If the share were to move 1 Rand, I would make 1 Rand profit. That is equivalent to 10 Rand of my capital outlay. 10% of my capital outlay. I put 10 Rand down, I made 1 Rand profit, I made 10%. If I were to lose 1 Rand, obviously the inverse applies as well. The example on here from an FX point of view really and truly actually explains it from an FX point of view really, really brilliantly. I'm not going to even try to change it. I'm literally going to read it as is. If you had to say that you have a leverage on the Australian dollar, Japanese yen, is 500 to 1. What this actually means is, from a leverage point of view now, is that you are leveraged 500 times the equivalent amount of Australian dollars that you have in your account. So in other words, if a trader puts on a one lot position where one lot equals 100,000 Australian dollars, then a trader's margin requirement is going to be $200. Simply put, you are now getting one lot of exposure, and one lot is equal to 100,000 Australian dollar. Remember, that is the base currency. So your leverage is 500 times. So that means all I need is 200 US dollars to be exposed to 100,000 AUD. 200 times 500. That means you've got to have 200 Australian dollars in your account, and you will then be able to go long or short one lot. If the floating value, though, of a trader's account, and what we mean by that is if your balance falls below their margin requirement. So you've got 200 Australian dollars put down as your margin. The broker does have the right to close the position. Now with us, we allow you to use only 50% of that margin. If you use 50% of the margin, so in other words, you put down 200 Australian dollars, and that's all you have in your account, and you were to lose 100 Australian dollars, we would then automatically close out your position. The thing to understand is this about leverage. We all love leverage because, well, I'm only going to put $200 down and I'm going to get exposure to 100,000. Wow, that's amazing. That's brilliant. Literally one pip movement is going to give me a nice profit all the time. But the thing to understand about it is that, yes, you can make money, but just remember the inverse applies on a loss. You are leveraged 500 times. So you make a loss, it's going to be equal to 500 times whatever it is that you're trading in. And your losses can be 500 times and your profit can be 500 times as well. And that's the reason why the very last line is there. People love using leverage, but it is to be used with prudence and caution. Significant leverage can just as easily result in great losses as it can in great gains. You have to be very, very well aware of this before you start trading in FX. Okay. So that's actually the simplicity of FX. You need to understand leverage. You need to understand the put costs. You need to understand what the FX currencies are, major, minors, and exotics. You need to know what a base currency means and what a quote currency means. And once you've understood all of this, well, now you're doing well. Now you understand the basics of it. But the big thing now is, how do I trade it? And this is what I wanted to talk about today, because this is the most important thing. If you're gonna, to help you better understand how FX trading works, these examples, I'm going to give you a long example and I'm going to give you a short example. But this is important to understand. And the reason that I've used these examples is I've used them purely not for technicals, but purely for you to understand how something like fundamentals can impact your trade. So the US job market seems to stall. You think the level of the non-farm payroll will be below the estimates of analysts and expect the US dollar to weaken against the euro. For that reason, because you're thinking that the US dollar is going to weaken, which means the euro will strengthen, you're going to buy one lot, which is the equivalent of $100,000 of euro USD, and you're going to buy it at 1.2101. Now, one lot there, and based upon your leverage, it pretty much corresponds to you making $10 per pip movement. Now remember this, that means that if it goes from 1.2101 to 1.2102, you've made $10 profit. If it goes from 1.2101 to 1.2100, you're going to make a 10% loss, a $10 loss, sorry. So you go into the trade, the report is released, and the NFP headline number prints weaker than the expert's estimate. So your fundamental analysis was correct, your research there was correct, and suddenly the dollar slumps. The Euro USD pair now trades at 1.2152, and you decide to close the position. You're long, and you're closing it because you've made your profit. There's how it works. It's a simple calculation. You had one lot, you opened the trade at that amount, and you sold it at 1.2152. The difference there is 52 minus 1, which gives you 51 pips. So your profit is 51 pips times $10. That equals to $510. If this was a ZAR account, all that would happen is we would convert that dollars to ZAR, if your base currency was a ZAR. That is literally why fundamentals are also so important, because this example, just by the way, was actually done quite a few years ago. It was done about 2 years ago, I think. And we've just had the farmer's payroll come out. The only difference was it was higher than the analyst had predicted. So the dollar didn't weaken, the dollar strengthened. Okay. So that's the reason why these things are so important. You could have had every single technical analysis here, and the technical analysis would never have given you that answer, that it's going to move either way. Now the example for going short. So in the first one, remember we used something with 5 decimal places. So we looked at the 4th decimal for the pip movement. Now we're looking at the Japanese yen. Now, when it comes to the USD Japanese yen, what we have here is we have only 3 decimal places, which means we look at the second one for the pip movement. Okay. So let's assume that you open the USD Japanese yen and you open up the 1 hour candle chart. Now here we're looking at technicals. Okay. So in the morning, the pair is trading at 113.63, and your technical indicators suggest a high probability for the market to move lower. So it's not going to go up, it's going to go down. You sell this time what we call a mini lot. So instead of it being 1 lot, you're selling something, for example, 0.1 of a lot. You can trade 0.01 of a lot even as well with ThinkMarkets. But here you're selling your 1 mini lot, and that's $10,000 exposure, no longer 100 because it's a mini. And that pretty much means now for every pip movement, I'm no longer making $10, I'm making $1. The same exact principles apply. If you've looked at your technicals and it's showing that way, you do it. Yet again, you can then get out of that position and make your profit. But remember, for every pip movement this time, it is going to be $1. So all you need to do is subtract 113.63 minus 113.27. And in this case, it will be exactly $1 for every one of those pip movements. And that's your profit. It's as simple as can be. Okay. The one thing though that I put in here, and I put it in on purpose, is the very last line. You set your take profit at a certain amount, and you set your stop loss at a certain amount. And that is the most important rule of trading FX. When you open a trade, the most important rule, immediately set your take profit and your stop loss. And yet again, we'll show you that shortly as well. Okay. So now with that, very, very quickly, what is all this technical analysis about? Why is it so important to everybody? Yes, the majority of traders, we use technical analysis, but we don't use it alone. We use technical analysis with fundamentals. I used to, for 15 years, I've always said to people, technical analysis helps you to know your entries and exit points. It gives you that opportunity to see when is the right time to buy or sell, but your entry point, what price is your entry point? It's the fundamentals that in most occasions will tell you which way
the market's going to go. But there are various types of technical analysis out there. One of the things I like using is RSI. Okay, and RSI is quite a simple thing to gauge. So what we do with RSI is we say, well, if something goes above 70, it's thought to be oversold. But if the RSI goes below 30 on the chart, well, that's when the reverse applies. Okay, the price is likely to reverse if it goes below 30. So RSI is one of the nice indicators. It is something I won't lie, I do use quite a bit in my trading, but you've got to understand it before you do it. Now, you can spend all the time you want looking at things and adding indicators, but you have to start looking to see which ones suit your trading style. And it is so easy to understand indicators. I'm actually just going to bring this screen across here quickly. ThinkMarkets.com, on the ZA site, you can actually literally go to ThinkMarkets Learn to Trade Advanced Technical Analysis. Okay, when you're on that website, you can see here under Advanced, and in fact, I'll take it just from the start. There we go. So we go Learn to Trade, Trading for Beginners, Advanced Trading Tutorials. You can choose either one. Even if you click on Trading for Beginners, it'll take you to the start of this over here. You can scroll down, you can look at everything over there. You can read through all of this information, and you can ask anybody from Rochelle to anyone. This website has got a hell of a lot of information for you. Okay, but if you click on Advanced, now you can start seeing exactly what technical analysis is. Japanese candlesticks. It'll take you through technical analysis. You can look at Fibonacci. Can never pronounce it. Anyway, you can look at all the different ratios. I'm going to skip it. I'm not even going to try and do the tongue twisting thing. But you can look at all the ratios. You can understand how support and resistance works. And it's explained to you in detail. So you can then look and see which one works best for you. Okay. So with that said and done, let's go to ThinkMarkets, the web trader. And let's actually place a trade, because the web trader for me is one of the best tools around. How do we get to your web trader? If you have an account with us already, you have a CFD account. It's actually quite simple. Just scroll right to the top. It says client login, go to web trader. When you open up your web trader, this is what will come there. It is for your CFD account only. And this is actually one of the coolest things around, I won't lie. By the way, for all of those that don't like dark mode and that, yes, you can actually switch. So instead of just over here at the bottom, there we go, bright, nice light mode. Use this when you have load shedding. Alternatively, switch it to dark mode. Okay, cool. Now, the other thing on here, just before I go through everything else, and I do apologize for this thing freezing because right now my wonderful internet is giving me a bit of issues. Let's just reload it quickly. There we go. Okay. The other thing we get is also from on this platform is all the markets as well. Okay. Sorry, give me 1 second here. It just logged me out. I just want to go back in. While I'm doing that, I'm going to give you some free advice. As you can see, I've moved this off my screen. I'm not sharing my username, my password with you. We also have two-factor authentication. Please use the security features that are there for you. Okay. We don't do third-party payments. So yes, if somebody gets into your account, the worst thing they're going to do is, if you have money in the account, they're going to trade with it. Hopefully, they do the right trade and you make a profit out of their trading. But that's the worst case scenario if somebody gets hold of your username and password. But at the end of the day, I think we all know it, especially as South Africans, we do not share username and passwords. ThinkMarkets will never ask you for it. They'll never ask you to click on a link and then say to you, what is your username and password? Okay, please do not do that. All right, let's take it back here quickly. So what we have here right now is the minute you log in, you'll get your trading screen. It will default to 6 different charts. You've got your cash balances, your profit and loss. It will give you equity, your margin levels, and obviously your account number over there. You have watch lists here on the left, and you can obviously create different watch lists. I've got a popular one, I've got a CFD share one, and then I can create a new one if I want to as well. If I want to add any shares to this over here, I just hit the plus and type in the instrument I want, and it'll add it to the watch list as well. Okay. Dark mode, light mode, all of those things over there, as well as contacting us. And then we also have something which is called one-click trading, where this lightning is. If you switch on one-click trading, this is very dangerous unless you are really, really good at trading. Because one-click trading, and by the way, the markets, as you can see, Euro USD is still trading. If I click right now on the buy, the order is in. There's no mistake there. It means you want to buy now. You hit the one-click trading, it'll immediately. If you don't have it switched on, like I have there, I can click on it, and what it will do is it will actually open up a tab for me in the sense of what I actually want to buy or sell, and it will actually, and I'm not doing it right now because I just want to show you something else, but it will actually open up a tab, and it will then allow me to enter my order in. Okay. But the one thing I just wanted to show you here is we show you the markets. You can have risers, fallers. If you want, just from a Forex point of view, just click on Forex. It'll show you every single thing there that is moving at this moment in time. It'll give you the low, the high, the buy, and the sells as well. Okay. Below that, you can see you've got your news, your FX Daily Pro, and so forth, which you can obviously click on and see what is interesting you. But ultimately, the markets tab is there for you to use to help you make informed decisions. Okay. The next thing you have is what we call the calendar. And this is very important because it's showing you what's upcoming. It shows you what has happened. And by the way, it doesn't just show you what the events are. When you actually click on it, it'll actually show you, and you can click on the graphs and that there over here on the right, which I'll do right now. You can actually see what happened. So if I look at the event chart over there, it'll actually tell me what exactly happened in previous times. So I can see how things moved, what is the forecast, and what is the actuals. It gives you your volatility, all of these things. So in fact, let's choose something here. I know there was one of the things, sorry, past events. Let's go back a bit. Let's go back here to, as you can see, there's just way too many things happening over there. The US retail sales. If I click on any of this over here, the price charts, it will actually show me what exactly happened here. You can actually go back in time and you can see what the actual and the forecast is and what happened then, obviously with that USD, for example, USD CHF, you can change it to the CAD, you can change it to whichever other one. So you can actually understand when these things happen, if the actual was above the forecast, what's going to happen. Okay. There's your calendar, and by the way, it gives you South Africa, it gives you all over the world. You can filter and how you want and what you want to see, low, medium, high, you want G7, which countries you want it for, it will give it to you there as well. Okay. The funds tab, well, that takes you into the actual funding where you can deposit funds. Remember, you can deposit funds with us through Ozo. You can deposit funds with your credit card, debit card. Those are instant. It's allocated immediately. If you do bank wire, obviously, if you're doing it from, so we bank with Standard Bank. If you do Standard Bank to Standard Bank, it will obviously be there almost immediately. But if you're doing from any other bank, it can take 1 to 2 days. Okay. So let's go back to trade. USD ZAR. As you can see, the USD ZAR is still trading because Forex markets don't close like normal markets. Okay. If I wanted to buy some nice USD ZAR because I feel that I need to go long, I've looked at the technicals. I can see it's up there. As you can see, it's already showing me what's the movement right now. If I wanted to go long, it's plain and simple. I click on the buy side of it. I want to put an at market order or a limit order. At market order, it'll match immediately. Limit order means that I want it at a certain price. I don't want it at this price. I think it will come down before it will go up maybe. That's when I can adjust the limit price. Then I've also got when I choose a limit price, remember at market goes through immediately. I can say when I want it to expire as well. And obviously the last but not least is lots. So for me, I'm just going to do a market order for now. I'm going to do 1 lot. And immediately, I think you've seen it already, my margin usage immediately changed. If I wanted to do one lot in USD ZAR, it means that I'm going to need 36,848 Rand. Obviously, that's going to change depending on how this price changes. Okay. But I only have 2,000 free margin. So that's not going to happen. We're not able to buy one lot. We can look at 0.01. Why is it not doing it right? 0.01. If I do 0.01, I'm using 368 Rand. So let's say I want to try and use a bit more in my margin. Remember what we said, if you're going to be very, very close. So if I were to do, 0.09, or let's do it a bit lower, 0.07. Now we have to go lower, 0.05. Okay, that's quite tight. If I had to do 0.05 and I use 1,843 Rand as margin, that only leaves me with the difference, which is just under 200 Rand for fluctuation in price. So my P&L can go up and down by 200 Rand, and then I'm starting to eat into my margin. Okay, so we've got to be very careful of that. Many times people like to be using as close as they can to their margin. My advice always to people is don't. So I'm just going to do 0.02. And the first thing obviously is I need to put in my take profit. And this is what I love. When it comes to the web, as you can see, it's starting to appear here on the graph, by the way. But if I put in my take profit and if it goes to this price, it tells me what my potential profit would be. I can click on that to say, oh, wait, I want a bit more money. And it will change it for me. Or you can just type it in. Let's say we want it at 149. Stop loss, again, same thing. I'm only willing to lose 92 Rand. The minute I do that, I'm happy. I've got a stop loss and a take profit. Don't be too greedy on things. All right. 100 Rand is pretty much on what I'm putting down on 700 Rand. That's not a bad return at all. Confirm buy. It'll then make sure I'm happy with everything. It tells me exactly what I'm doing. And that's my last chance to say no or edit or place the order. Order's placed in the market, and there you go. And as you can see, from the time I've just placed the order, immediately the spread, because I bought it at 1843.694, I can sell it now at 1843.11. Okay, it's jumping all over, but anyway, you get the difference there. Obviously means that is my P&L. And that's the reason why the spread between this is always important. If I'm buying it at that, and there's a 61.8 spread, 51.53. That spread is obviously going to impact my P&L immediately the minute I buy something. Okay. However, the thing here is, that's how easy it is to actually place an order. By the way, for all of you guys that love technical analysis, this is most probably one of the best around. So first and foremost, I can actually expand this. So I just want to have one graph. I can start adding indicators. You can do your, come on. And there we go yet again, my wonderful PC. Guys, I have to apologize for this. So click on your indicators, and I've got the RSI, as you can see on there, but you can choose any one of these, and there is hundreds to go through. You can decide which indicators you want to use, which will help you with your trading. You can decide if you wanted a 1 minute graph, a 5 minute, 10 minute, 15 minute. So this will all change and update. Okay. If you want it on a 15-minute candlesticks, it will change this entire graph to it. Then comes the really cool part. Obviously, zooming in, zooming out. You can do all of that. You can do all your drawings. You can draw your lines however you want to. You can change your grids and everything else. But now, if I just want to go back to that screen, I can actually just click on this at the bottom here, and then I've got all my graphs over there back again. Now, if I wanted to take this graph completely separate, I click on this over here, and now it'll open up one big graph for me. And if you have more than one screen, like I do, you can actually then move things around. So I can take this and put it onto another screen and come back and do whatever I want to as well. Okay. Sorry, guys, like I said, I've got unfortunately some very, very slow internet here today, and it's causing a lot of problems for me. So I do apologize for that. Anyway, but that's how easy it is to trade. And this is the point of this here, is to show you that the trading is the easiest part of this entire piece. When it comes to FX, the trade side, and when it comes to any trading, putting in your order is simple as can be. It's easy. It's not a complicated thing to do. The complicated thing is knowing whether I need to go long or whether I need to go short. Knowing what I'm trading in. If I'm trading in USD ZAR, what's going to impact this price movement? What's causing this to move? Is there announcements coming out that's going to impact this? You've got to understand all of these things. Okay. Now, like I said, I do apologize for this wonderful internet problem that I'm having, but ultimately what would happen right now is I could literally then on that screen, as soon as it loads, I'd be able to just close the position and I click close. If I were to place a sell position, it would not close my long. So here's it here, as you can see, I'm there. If I feel, you know what, I'm just happy to take my 3 Rand profit, I hit close and I close the position, it'll close it out for me there and then. If I had to go and sell, it would open up a long and a sell position. So you have to always close your position up. Okay. All right. Raquel, just to let you know, it's not actually the platform. At this moment in time, I won't lie to you, we've been having a lot of connectivity issues right across South Africa. I've been seeing it on my app. I've been seeing it on quite a few things as well. From an international point of view, I mean, a lot of our clients are actually, you know, overseas, and that they, believe you me, if there was any slow responses, it would be already logged. But everyone overseas is seeing it quite fast. I have no idea why. From a South African point of view, it has been giving us problems. But anyway. Okay, now with that said and done, everybody, let's move on and let's continue. So we've played around with the web. As everybody can see, you can place an order quite simply. Easy as can be. When I took this screenshot, we saw that the USD ZAR was 1860. And I imagine if I had shorted it at that point. Okay. So the next thing is, what platform do I use? Now this is purely a choice piece. I showed you ThinkTrader. For me, I'm a person who loves using in-house platforms. I love using ThinkTrader. I won't lie to you, from a web point of view, because it's got every single thing I can do. I have multiple screens and I love having certain graphs open on certain screens. Okay. I enjoy that. I can also then have multiple things. I can be seeing fundamental analysis and still have my graphs open as well. And I can decide which one to go into. For me, ThinkTrader works the best. Easy, and it is simple. It's not complicated at all. But you do have a lot of people that prefer the MT4 and MT5 platform. And what you find is majority of MT4 and MT5 users are FX traders. I won't lie. And the reason for that is because those are the platforms that came out way in the beginning. And everybody that was trading FX could only trade on an MT4 and MT5 platform. There is nothing wrong with them. I do, for me personally, I find them sometimes a bit complicated. So I therefore say, you know what, let me rather use people's in-house platforms. For me, ThinkTrader works 10 times better than MT4 and MT5, but that's up to you. If you want, though, a Think0 account where you can just pay, where you're getting the raw spread and the commissions, that's only available on your MT4 and MT5 platform. Okay. But with that said and done, and as we start getting towards the end of today, very just quick points from a trading key takeaway here today. Please learn. We always say, don't be afraid to pay school fees. Yes, you are going to lose. But learn when you make a loss. Learn when you make a profit. Understand how that happened. What did you do? What research did you do? Why did you go long? Why did you go short? And why did you make a profit, or why did you make a loss? We always say trading is the short term, but your results come over the long term. There is no successful trader that has been trading for 1 month that they can just say, listen, I've made my money. I don't need to worry anymore. You will find that you will make losses. You will make profits. Learn from them, and that's when you become a successful trader. And trust me, you can last then in trading for more than 5 years even. Okay? If you're new to trading, understand your risk. For many people, if you're new, don't just dive into FX trading, But if you are going to dive into FX trading, please take what you've seen today, understand it, and learn how that market works before you dive into it. Okay? Cool. Now, just a little piece with regards to a lot of people, like myself, I love traveling. And many times, unfortunately, I have to also travel for work. And trust me, traveling for work is no fun. Ask anybody that does it. But the thing is this, is that you can actually hedge using FX, but not using the CFD account. You need to use what we call our share account. Now, the share account is literally where you can buy and sell all the different shares, ETFs, and everything else, your MTNs, your core share 500s, all of these type of things, okay? It's available only on ThinkTrader app, so not on any of the other platforms, it's only on your ThinkTrader app. The thing is that there are ETNs for USD, GBP, and Euro. And you can literally actually go long these instruments and hedge it, your exchange rate. Now, I use this, and I won't lie to you, I use this a lot when it comes to any holidays, if we're going overseas, if I have to travel for work and I need to exchange currency. What I do is, if I look at the exchange rate, and for example, when the exchange rate was at 17 Rand, I would literally go and buy the ETN. So it's called new USD, there is new GBP, all of these different ones, okay? If it's USDs that you want, and let's say you want to get it at 17 Rand, you think, just argument's sake, 17 Rand is a brilliant actual exchange rate. You know what? Put your money by the exchange at 17 Rand. If that goes to 18 Rand, goes to 19 Rand, what that means is you've made one, let's say 1 Rand profit. You take it out, you sell that ETN, you take the money out and literally go to, with that money, you go straight to your exchange rate, and literally then you're buying the dollar at, say, 18 Rand. You've not actually, you've hedged it at 17. Your profit of 1 Rand paid for the difference. If for any reason it's 17 Rand and it goes down to 16 Rand, well, then you made a loss here. But guess what? You're now paying a better exchange rate. At the end of the day, though, you're still paying 17 Rand for your currency. That's what hedging ultimately means. And if you want to go into Forex trading, maybe first look at these ETNs. So open a share account, trade the ETN. You can't go long, you can't go short on it. There's no overnight funding or swap rates, okay? You can't trade with leverage. There's no leverage here. It's there for you to take advantage of when things are going to get bad. You can actually hedge yourself. And that's the cool thing of it. Okay. So very, very quickly, why ThinkMarkets? First and foremost, guys, this is a very big thing when it comes to FX trading. FX trading is an OTC market. You are not going to just get the same prices from every single broker, as you are not going to get the same price if you go to a bank and exchange your physical rands for dollars. Everybody has a different price. It's an over-the-counter derivative product. And the problem with that is it means that you have a lot of people out there that can take advantage of this. And that's the reason why you have to be with proper regulated brokers. ThinkMarkets, yes, we've got all these different licenses, but the most important thing is we have in South Africa, not just an FSCA license, but we also have an OTC derivatives provider license. With us, if you want to take your money offshore, you can. You can then look at opening up, but we'll only open it up with another proper regulated entity. So for example, maybe the FSA, the Financial Services Authority of the Seychelles. It's actually one of the tougher regulated environments, believe it or not. So you've got all this opportunity to deal with a proper derivatives broker, licensed broker. You have problems, you have somewhere to go to. So please make sure that your broker is a licensed OTC derivative provider when you're trading FX. Secondly, you also have a choice, and this is important. This is one of the only brokers where you're going to be able to trade FX on your CFD account, and at the same time, you're going to be able to invest. You're going to be able to buy the shares. Everybody sees shares. Whenever somebody sees shares plummeting, everybody goes, ooh, it'll get out of the stock market. That's the time you're supposed to be buying. Standard Bank and all of these shares have plummeted. And they've plummeted purely because of market sentiment. Standard Bank, Nedbank, ABSA, all our banks here in South Africa, they are very well regulated. You're not going to have an SBV happening here. It's going to be, it can happen, yes, make no mistake, but it's going to not just happen overnight as it did. So there's your opportunity to look and see, wait a minute, these prices are falling more because of market sentiment than anything else, because they are giving, and they have been having really good results. So look at these things and make decisions. But like I say, here's the nice thing with ThinkMarkets. Open a CFD account, open a share account. CFD, you got your live streaming prices. There's no monthly fees. We don't charge you for deposits. Sipo, your question, how long does it take for a deposit and a withdrawal into SA bank accounts and Think? If you use OZO, your money is immediate. If you use a card, it's immediate. If you do it via bank wire and use, depending on which bank, as I said, it can take up to 2 days, depending on when we receive the money in our bank account. Okay. When it comes to withdrawals, withdrawals are processed within 24 hours of you requesting it. In fact, I've never seen us go over a day. So normally it's actually the same day, but I mean, if you're requesting withdrawal at 5 o'clock in the evening, my team do unfortunately have to go home at some point. So they'll process it for you then the very next day. However, payments to cards, for example, especially credit cards, the problem with a lot of cards in South Africa is we have no control over when that money will show up in your credit card or your debit card. I will release the funds today, and it can take, as per the banks and not per us, the banks say it can take up to 7 to 14 days. Normally, on average, I won't lie to you, it shows up in people's accounts within 3-4 days on your credit cards. Okay. But if you don't want to use credit cards, use OZO, and then we'll obviously pay it back into your bank account. But like I say, your CFD account, you've got over 4,000 instruments. From SA CFD shares to US CFD shares, FX, you've got over 42 different pairs that you can trade on. The share account, you're getting 0.25% brokerage. You're getting technicals and fundamentals. You get live snapshot prices worth market depth for free. There's no cost to you. Follow ThinkMarkets on your Twitter, LinkedIn, or even Facebook, and you'll see the amazing research that comes out. You won't believe this, but I do a lot of radio, I do a lot of TV, and a lot of the presenters on there actually follow our Twitter accounts because of the good quality research that comes out. So they're getting their market insights from there. Why can't you? And it's free. Okay. With that said and done, I just wanted to make sure that, as always, we are a financial services provider. There must be a disclaimer with everything said and done. But I will, unlike your banks and everyone else who tries to hide the wonderful fine print, I will tell you exactly what this means. It means whatever we've spoken about today, I've tried to use things to illustrate examples, and in no way have I told you what to buy, what to sell. They are there for example purposes. I've advised you in no way what to buy and what to sell. Okay. Thank you very, very much for your time today. With that, I am going to be taking some questions. So if you have any questions, please do me a favor, type it in the question and answer session, and I'll gladly answer those questions for you. Alternatively, though, while we're waiting, anybody, if you've, after watching this and you still need more information, please go to ThinkMarkets. Go to www.thinkmarkets.com, and you can actually go onto the live chat. We have 24/7 support there. You can ask any questions there. If they can't answer you, they will let you know, and the South African team is available from 8:30 tomorrow morning, and we will get back to you then as well. If you don't want to type on live chat, oh, and by the way, our live chat, it's there to, there is a human being behind it, so don't stress. But if you really and truly want to talk to a physical human being, you're more than welcome to actually go to, phone us. The number's there on the screen as well. 010-446-5933. Okay. Cool. Raquel, I'm going to ask you, if you don't mind, giving me a call with regards to that question that you've got over there. I actually can't right now go back to the website at this moment in time. All right, the next question. Does ThinkMarkets allow non-SA citizens to buy shares in South African companies? Unfortunately, Bakken, no, we don't. And the reason for that is we do not have non-resident accounts at this moment in time. So you have to be a South African citizen, as you do also require a tax number because of dividends and that is paid to you as well. Okay. So I do apologize for that. You can't have a share account, but you can definitely open an account with regards to CFD share trading, and you can benefit there from the dividends as well, because you do get manufactured dividends on CFD shares. Okay. Cool. Guys, with that, I do know I've gone a bit over. If there's anything else that anybody wants to know, please reach out to us, like I said, on live chat or via telephone, and we'll gladly try and answer any questions that you have and anything that you need as well. Okay. Ladies and gentlemen, thank you so very, very much for joining me tonight. I hope you have learned a lot, and I hope you've started to understand how FX trading works, and I'm quite certain that you will be doing quite well. Okay. Thank you very, very much, and we'll chat soon. Take care.